Sometimes you just have to let cooler heads prevail and find a different solution. I ain't gonna lie to you, originally this video was going in a very different direction because I woke up and I chose violence this morning. But in those moments, it's always wise and prudent to take time, create some space, cool down, look within, and ask yourself some important questions. Greek philosopher Epictetus is famous for saying it's not what happens to you, but how you react to it that matters. In cognitive behavioral theory, they teach us something very similar. It's not what happens to you as much as the meaning you attach to it. I know. You're not sure where I'm going with this because you didn't click on this video to wax poetic about Stoic philosophers or counseling approaches. That may not be the truth, but let's just pause for a moment, open our minds to the possibility that this may be exactly what we need right now. Some grounding, some fundamental principles to help keep us steady, because holding these metals has been an interesting journey as we've had to handle a tremendous amount of volatility over the last 3 years or so. Heck, the last 45 days were enough to give you whiplash. 45 days ago, gold was at 1830 and quickly moving towards 1800. And now we're up almost 8.5% just that quickly. And of course, right on cue, one of the two most dangerous people in the industry have come back with their standard crazy talk. You know who I'm talking about, the hypers, the pumpers, and promoters, talking about silver's rally, so you better buy now. Don't forget to buy this week's special so I can get paid. Shocking news, silver is running out. You better buy now. Don't forget to use my affiliate link so I can get paid. Silver is about to do something huge you've never seen before, so you better buy now, but don't forget to use my affiliate link so I can get paid. But just 45 days ago, and gold was $160 lower, it was the banks are manipulating the prices, which makes this the best buying opportunity, so don't forget to use my link. Premiums plunged, so you better buy now. Don't forget this week's special so I can get paid. Some creators didn't even get creative. It was simply, quote, buy silver now. But you can't forget to use my affiliate link, of course, so I can get paid. It's the same dang dog and pony show for the last 3 years. But like broken clocks and the boy who cried wolf, sooner or later they will be right. It drives me nuts because they act like the arsonist that puts out the fire that they started in order to look like a hero. Don't get me wrong, I have nothing against creators using affiliate links or monetizing their work. I'm against the psychological and emotional warfare they use against you or engage in against us for their gain. As playing on your emotions, especially high emotions, make you behave differently. You don't think as clearly, and as a result, you will make suboptimal decisions. It's like the kind of hype that had one person during silver squeeze reportedly take out a second mortgage to buy silver. Unfortunately, that was at the top, and I'm sure that person is still underwater on that purchase. We have to acknowledge that the continual bombardment of either doom and gloom or irrational exuberance or promises that silver is going to skyrocket and head to the moon has an impact on those that listen. And when it doesn't go to the moon and remains in the $20 to $25 range, they scream market manipulation and point to silver demand as justification for higher prices. Regardless of how much information exists or the number of credible people who refute those two claims in particular, that doesn't seem to stop them. And it's what makes these people so dangerous. Because if a lie is repeated enough, it eventually becomes accepted as a truth. I can't think of a more dangerous mix than an emotional investor who's making decisions based on bad, incorrect, or just wrong information. This is exactly how you and I as an investor could do the exact same thing of buying and selling gold and end up with extremely different results. Emotions paired with bad information is why most investors do not make money. This is exactly why they are some of the most dangerous people to your stack. Jeffrey Christensen from CPM Group says it best.
One of the things that you'll find is people speaking about that which they do not know. Now, it clearly happens in precious metals, and everybody has an opinion, and they're entitled to it. They're not entitled to having their own set of facts that differ from the realistic historical facts, but that's another issue.
The real question for you as an investor is, what are the facts that you need to consider in order to be successful? Let's go back to Jeffrey Christensen for some insights.
Our price projections are a marriage of these long-term realistic expectations of the economic and political developments that the world will experience, and a realistic assessment of the fundamentals of each individual market. You have to understand what's realistic in terms of supply and demand, reserves and resources, inventories above ground, the price elasticities of fabrication demand, investor behavior during periods of rising and falling prices. All of these fundamentals are very important, and they're very distinct and unique from metal to metal.
Many authors have written on psychological and behavioral traps that lead people into the wrong direction. Investing, human psychology is extremely important, especially since hypers and promoters are adept at preying on investors' emotions that cause them to act and fall into a number of these traps, number of these investment traps specifically. Their promoter is so dangerous because they truly believe in what they are promoting, which is what makes them so good at promoting it in the first place. However, the conviction is often independent of the reality of the market or the investment, and their impact is only made worse by their lack of understanding as it relates to the real investment at hand. I find many are just really good at regurgitating and recycling the same thoughts that are designed to make you feel a sense of stress, fear, greed, or temptation, as these so-called promoters have very simple goals: to make money off of your views, or off of you using their affiliate link, or off of you buying from their precious metal company. This is why every solution they have is simply buy more gold or silver. Markets go up, buy more silver. Markets go down, buy more silver and gold. Do you want to know what I've been doing? Doesn't matter, I'm going to tell you anyway. Over the last 6 months to a year, my physical purchases have slowed significantly. Frankly, gold over $1,900 just isn't as attractive to me. In fact, I've actually been buying a little bit of silver, not because my conviction is silver, because silver is just so dang cheap relatively. Premiums are falling, and my reasonable expectation for silver is to move to $60 to $100. I will share how I got to that number in the next video. Regardless, most of my money has been redirected to gold and silver mining stocks and a few other commodity stocks. And that's because of what appears to be a mega shift from financial to real assets. A few weeks back, I had Leor Gantz on the channel, and this is when we first explored this topic. You might remember some of these slides. For close to a year, I've been talking to you about expanding your stacking efforts into the mining companies that dig these metals out of the ground, as they present incredible buying opportunities. This is especially true as the GDX and the gold mining ratio has hit a 20-year low. Some of these charts should look very familiar as well. I can't think of an investment that is so primed and unloved as gold and silver are right now in general, especially when you consider that over 70% of investment advisors hold between 0 and 1% gold in their portfolios today. But the gold and silver mining industry has been bombed out and left for dead, which is what makes me really excited. Physical gold and silver and mining stocks have to be two of the most underallocated yet primed to move to the upside assets in the world. When I interviewed Leor, he talked about a number of geopolitical issues and the catalyst for a weak dollar. And to that point, Leor's Wealth Research Group has produced a number of excellent reports about these conditions and changes, and I encourage you to check out their latest report, which actually speaks to the reality that mining stocks are generationally cheap and forecasted to go parabolic very soon and suddenly. Those were their words, not mine. Anyway, the report can be found at www.wealthresearchgroup.com/boom. I encourage you to go check it out because, as we discussed earlier, you have to do your research and learn about an investment if you're going to be a successful investor and have a realistic expectation of performance. If you don't, you only become a danger to yourself and your money, which brings us back to you being the most important part of any investment. Because if you are incorrectly or undereducated as an investor, you become the most dangerous thing to your stack and your investment. You have to do the work. Don't just take what you hear from me. Heck, I could be wrong. I mean, I seriously doubt it. Okay. All jokes aside, I do get it wrong. I have stocks that are deeply in the red at the moment, but I also have stocks that are up 437%, 279%, and a bunch that are up around 50% or more. Why am I so comfortable with these stocks that are still in the red? It's because my goal was to use an investor's best friend, time, using time to my advantage. As Buffett suggests, I want to buy straw hats in the winter. So as I slowly built my positions, I also dollar cost averaged in at lower levels. So when Hercules Silver took off, I wasn't chasing price. I was watching my investment multiply. When Fortuna Silver recently took off, my position quickly moved from red to green, and now I sit on a very nice sized position that is up 20+%. And this is even before the mining sector has gotten warm. This is what I want for you. But you have to do the work, do the research, read the reports like I just mentioned. In fact, I've read almost every report on Wealth Research Group's site in particular. Remember, Rick Rule talks about spending at least 1 hour a month on each stock that you own, because you and only you have to own your results and live with them. As much as I despise the hypers, the pumpers, and the promoters, and truly believe they are dangerous to people who listen to them, you ultimately get to make the choice of who do you let in your head. The biggest danger to you, your money, your wealth is YOU, that person in the mirror. What you put in the space to the right of your left ear and to the left of your right ear is what makes all the difference in the world. So I encourage you to get away from the promoters and start listening to people that will help you become a better investor, that will educate you for free and help you develop realistic expectations. I've already mentioned Leo Gans, but there's Rick Rule, Lobel Tigre, Lynn Alden, Mike Maloney, Jeff Christian, and so many others that offer you valuable insights into investing and the markets that will make you a better investor and are not dangerous to your stacking. There are also great stacking channels like 2 is 1, Smart Silver Stacker, the Daily Gold, Strategic Wealth Preservation, Gold Silver Pros, and even SD Bullion's channel that you should be watching. Take control by being more knowledgeable, and you'll be less likely to be influenced by the dangerous promoters and the biggest danger, which is you not being educated. In the comment section, and on a more positive note, what are some of the stacking channels you recommend people watch for their educational value? What are some of the dangers to us as investors that we also need to watch out for? Or simply put an A+ in the comment section so that everyone knows that you always stack smarter and never stop learning.